Happy New Year, Ken.
Happy New Year, bud. How are you? It
I'm doing fabulous. How was the holidays?
was all good. Nice and mellow, appropriate. Um, didn't seem to last too long. Plenty of good football. It was an A plus. And you?
Yeah, ditto.
So where are you now?
I'm in Southeast Michigan right now. A little bit gray skies. I'm looking off to my right. Um, yeah, I'm missing Florida, but I'll be back here sometime in February.
Right
Um,
on.
let, I want to help the audience get a feel for what we're feeling so they understand really what's going on in this housing market as this calendar flips over. Normally, or in previous, we'll say the last 5 years, as soon as that calendar flips to January 1, it's go time. You're in Phoenix, I'm in Florida, and those markets are already going right now because of all the snowbirds there. Activity's high. Dead on right there so far.
Spot on. Yeah, that and you've got the whole New Year's resolution thing that kicks in early on.
Yeah.
So
Oh yeah, I'm buying a house for sure. Yes.
typically they want to get started on that to-do list, and inbound inquiries or activity picks up right about now, the end of the first week of January. You're spot on.
Okay, so I want to get your feel based on the way our emails are coming in, texts and phone calls. So calendar flips over in 23 versus take me back 1 year ago. Calendar flips over in 22. Give the audience a feel for level of activity now versus then.
I'll start with then. So last year at this time, our activity level was at a 10. The meter was pegged. We had immense activity and people wanting to buy a home, huge excitement about the opportunities, and we had extraordinarily low interest rates. So we were even getting a ton of calls from folks that we've done loans for in the past, inquiring about refinance opportunities. Fast forward today, so from 21 to 22, I'm going to give that a 10 out of a 10. If we look at the calendar year flipping this year, that might hit 1 on the radar, on the meter. So instead of a 10, I'd say it's at about a 1.
Okay, hence the name of the title of this topic is when is the housing market going to improve? That's what we're talking about. This is not a wonderful spot for most folks to be in unless they're already in their home and they're at a sub 3% mortgage rate, which a lot of folks are, and that's great.
Yep.
Those folks aren't actively looking to move up or move down right now if they have mortgage money. So they're kind of off on the sidelines. Refinances we know are gone. Anything over 6% has killed that. And now we do have that one that you're feeling right now. Was it lower in October or November? Was that
It was
potentially a
Yeah, we were at 0 for much of November.
okay?
We had a little bit of a spurt of activity in December as rates had come down from the recent highs. And now we've picked up, or we've maintained that level right now. But when rates got to that number that was 7.25 or 7 3/8, I think I called our cell phone provider twice just to make sure that service was still active.
Still working?
Exactly. Yes.
All right. So better is kind of a funny word. But I want to use that in terms of when can more folks qualify for a mortgage to purchase a home? So we're battling high home values and we're battling high interest rates.
We are.
Rates will determine when refinances come back. So as we sit here at a 1, we're actually getting better from where we were a month ago, which might have been a 3/4. November might have been a half.
Right.
So slight improvement. When you think about better, what are you thinking about? What comes to top of mind?
It's the consumer's psychology or their ability to embrace that buying a home makes sense. And, all of that is sort of a tailing aspect of affordability and interest rates and sort of the general perception that's going on in the marketplace. So, the folks that are now calling that weren't calling before, there's still some anxiety, and it's not as much of a I can't wait to get this done, let's do this approach. It's let's see what happens, but I'm going to at least take a step and see what happens.
Dipping the toe in the water.
Dipping the toe in the water, but cautious, and concerned, and almost looking for a reason of why it won't go through. Meaning, hey, this has all got to go my way or I'm out. Where if we go back to last year, the first half of the year, it was, what do I need to do to make this work? Now it's shifted to, hey, there needs to be some concessions from the seller if I'm going to proceed with this.
Interesting that you went to the concessions part, because I was thinking about a couple of those offers that our folks put in, and we had a couple go in, 2 or 3 go in significantly lower, right?
Yes. Yep.
Than list price, and
Surprisingly lower.
they're now at that spot of, if I'm going to do this, I'm going to take a crack at picking it up for maybe what I perceive to be a discount.
Yep. And there's excitement in that case. Right.
And then we get to the other folks, 2 or 3 of them have put in full price offers right now because they want to win and be done and don't want to be dragged through the mud.
Totally. Yeah, you do definitely have different perspectives. I'll do it if, and I've got to get something done. How do I've got to move. I have urgency and I need to get this off my to-do list because life needs to happen. How do we get this done quickly?
Now, most of these offers we're talking about, I'm thinking of the last 5 or 6, have had price reductions.
Yes, all of them have.
So they've been sitting days on market for significantly longer. You want to pull up you have prepared some information on what it looked like at this time last year versus, okay, housing market prior to July of 22. Okay, multiple offers. Yep, totally remember that. Everything was going over asking, waiving inspections and appraisals. Very dangerous. They took the risk. A huge amount of cash offers. That's still the case now. Home appreciation was running hot for 24 months. Okay, all that makes sense. That's what everybody, when they think of housing, they're thinking of that versus what you're going to put up now. This is where we are right now. Few, if any, multiple offer situations makes sense. Not enough people out there dipping their toe.
Yep. More people are under the understanding or willingness to say, I'm going to throw out an offer. I'm not concerned about offending the seller. I'm concerned about getting to the price that the max that I'm willing to pay and the least that they're willing to pay. And sometimes that takes a period of time.
Yeah, that offending the seller has left the building.
Yep.
Okay, seller to pay for costs. They're using those costs for
Temporary
buy downs.
downs. Yeah, minimize cash out of pocket.
Multiple price reductions. Sellers emotionally hanging on to every dollar. I mean, it totally makes sense. It's tough as a seller to watch it slowly evaporate on the backside of the mountain.
What's the saying you've used a number of times? What's that? Catching a falling knife. Yeah.
yeah, it's hard. Just rips right through. Nothing you can do about it. So that's where the guidance is coming in right now when you're speaking to these folks. Totally different. I mean, tale of two markets. Now we're getting to the spot of, again, you've had a couple of people go in at full price,
Yep.
win their bid.
And that's
And a couple-
after, it's funny, that happens right after a recent price reduction.
So not
So
technically full price on those.
Yes, it's not full price, meaning, yes, correct. The sell, not full price from where the seller started, full price to where it actually happens to have, the level that it got to.
Now I am seeing some in Florida that will go in the first 1 or 2 days. Again, this is not the norm, but it's happening still, depending on the area that you're looking. But for the most part, I think this is a great outline. Gift money still happening significantly?
Yeah.
Or is that cooled? Still happening?
It's cooled a little bit because now you can compete and win an offer with a minimum down payment. If we go back prior to June of last year, sellers weren't willing to entertain offers with a 3% down payment. And so now buyers are actually able to just use their funds and not have to have an appraisal gap guarantee or put more money down to appease the seller. Now the seller's in a position where they can entertain those or look at them for what they are, which they're fantastic loans. It just is a cultural 180 from what we saw 7-8 months ago.
All right, let's hit next slide. I think you have some, here we go.
Yeah, so the shift in that slide from June of last year to what we're seeing now, all of that is because rates are higher and demand has slowed, right? And it's the affordability part. So, hey, what the heck is it going to look like moving forward? Are rates going to still go up? Are we going to be at this plateau level, or are there hopes or signs of improvement as we proceed? So here are, what are we at? 4 of what are considered to be the smart people in the room of what they expect mortgage rates to do as we move forward.
All right, so everyone says at what rate level will the market unfreeze? Will it start to get better? Again, what we're talking about. There'll be few more refis. People will be able to cash out cost effectively, and more people will be able to afford a home.
No, that's a great point. The mortgage industry has been just shredded because of the lack of volume, meaning that in a normal market for us as a mortgage person, there's still a big part of the business that we do is refinance. And it's not always because of lower rates. There's divorce situations, there's cash out situations for a number of different reasons other than lower rate. And when rates got to the spot where they were above 7, nobody in the world is going to refinance with few exceptions. So that's removed 40% of the possible loan application volume for the mortgage industry. And that's a big deal because it's difficult for companies, again, to go from a 10 to a 1 in a 12-month period of time. Massive change.
I mean, it feels like, here's our, this is a crazy one. But yeah, as you start to move down, what I love about this one is even at the bottom, when we get to 5%, we'll call it, and we're quite a ways away from that. I mean, probably we're being aggressive compared to those estimates that we just had put up there. But just to give you an idea of how much higher the principal and interest payment is versus even January of 22, 1
Yeah,
year ago.
this chart's been helpful when we speak with people of just, well, things have got to get better. Well, here's an idea of actually giving you the ability to quantify what that is.
Yeah,
And you're right. If we look at where we're at right now, 2 weeks ago, we were at the 12/31 numbers. Current rates are right around what we have here for 131.
hmm
But that's $180 difference since October or improvement. And then if we do get down in the 5% range, that's well, gosh, that's almost $470 improvement from where the peak was. That's a lot of money per month.
yeah, I think you might be able to get a car for that. I'm not sure what car, but
Right.
again, inflation is what we're talking about, which is as they fight inflation. I mean, we believe we got a 50 basis point cut or hike coming, probably 75 basis points more of rate adjustments up. And then once the market figures out that they're going to be done, that's when those rates will start to come back down, whether it's in June or July or September or October. That's the idea of kind of what we see right now in terms of we got to get down to that 5.25%, 5% number to really free this thing up.
And that's where, a lot of the questions that we have, right, is there's certain people that just can't afford to buy now because of the higher rates. I get it. There's another camp that can afford it, but mentally they're torn to say, again, I'm concerned about the payment. I'm concerned about property values dropping. I'm concerned that I can handle this, but I'm not real comfortable with it. I'd prefer something lower. And that's where, we use this illustration to say, okay, this is where you're at now. In the next 12 to 15 months, if it could get there, there's an if in there, but the other side of that is you have opportunities to negotiate and actually win now, where when rates get down in the 5.25 range, that's going to bring more people.
Investors are going to come back in.
And people that couldn't qualify before. And now there's a chance we may get back to what we saw in early 2022, where now it's more difficult to win. So it's just
this is the whole date the rate, marry the house, date the rate. You guys have heard that term. Don't love it, but this graph illustrates what happens if somebody closes at 6.5, and then they can refinance down to 5.25. That's a big number. 359 is a big number for a refinance. So
yeah, even if you did have closing costs, you're able to recoup those fees. In 6 or 7 months. And that's an objection that we get from a lot of folks too. Well, I'm going to have to pay costs.
We'll help you work through all that.
Super simple, meaning that the juice has to be worth the squeeze, but at $360 a month in savings, that's sizable.
All right. So better 5.25-ish, we think there'll just be a slow improvement of activity as we move throughout the year. I don't believe there will be anything explosive like we saw, last March, April, May.
Totally agree.
No, not going to see that. We can't see that because rates are too high, but they're slowly want to bring people back into the market. And, the other thing that we had going in our favor is rents have come down, I think 4 straight months, and not a huge amount, but that's stabilized. Investors that own homes, maybe they're going to decide to sell a home and get some more inventory.
It's not as exciting of a proposition to be a landlord as what it was before, meaning that my cost of funds, my borrowing costs are higher. The revenue that I can generate per month is decreasing. So it's less enticing for people to jump into the rental market than what it was. Again, that's good news for first-time home buyers, move-up buyers, anybody that's looking to do it as a primary residence compared to those investors.
All right, great stuff today. Thank you so much for all the detail on the PowerPoint there. And guys, different market, got to sound this stuff out. Got to bring your realtor and your lender together. Got to work together as a team. Got to figure out what the seller needs to do or can do, will do, won't do. Just a different ball game. We're still playing baseball. It's just it's small ball, I guess we'll call it.
Yeah, there's not a lot of home runs, so it's
No.
you got to get on base and figure out how to do that. So it's a good analogy.
All right, man. Have a great day. Thank you.
Peace. See you, brother.
See ya.